Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Monday, January the 30th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-tos to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to the trade levels, our targets, and our hypotheses for the day. We do create four main hypotheses in order to have a plan in place for what the market shows us. We do not know what the market's going to do. We can only have a plan to react to what the market is doing so that we don't have to create that plan on the fly. Then we wait to see what the market is doing, and then we adapt our plan to the market. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, let's take a look at the news first. Where'd my news go? There it is. Okay, so that's Wednesday. Today we've got we had core PCE pricing came out as expected. Personal spending came out just a little bit better. Personal income came out just a little bit worse. 10 o'clock today we've got pending home sales, and then we've got loan officer survey sometime during the course of the RTH. That's the only scheduled news. It is Fed week. We have Fed announcement on Wednesday, so just keep that in mind. A lot of times on Fed week we'll make a move on Monday and then hold in that area coming into the Wednesday announcement. It's also the last 2 days of the trading month, so we've got to keep in mind that, as well as the hedge fund managers put window dressing on. So just keep all that in mind. Taking a look at, taking a look at what happened on Friday. Friday we were looking for a balancing day. We had that gap up on Wednesday. We were looking for to balance out or look for a little bit of continuation. They actually opened up and they sat there and went sideways, fighting the low from Thursday and creating a B profile. B profile is a long liquidation. This is normal market reaction. This is not something that we have to worry about, but what we do have to consider is the fact that we could gap down today and leave an island top. But I'm not putting my bear hat on yet. So let's just back up a bit and take a look at the macro to micro. I always like to start my day with a simple candlestick chart. I start with a monthly. I use a 9 EMA, 20 SMA. I'm looking for the strength of the trend by the slope and separation of the moving averages, or where they're being challenged or violated. So on the monthly, multi-year, beautiful upward trend at the end of 15, beginning of 16, they challenged it and then they took it back. We got this rising 3 pattern here for continuation. They put the continuation in. They went in and put up this all-time high at 22.9950. That is an unequalized high. It was put in on the Globex. The Globex high is actually 22.9650. So we have an unequalized high. These are, throughout history, it's very rare to leave them alone. They will get equalized at some point in time. We just don't know when. The trend is still up on the monthly. We got good slope and good separation to the upside. Going to the weekly, we had a big week last week. Our range was 47.75. So we basically had a bullish engulfing week. This is a continuation pattern. And then so far today, today, which is the first day of the week, we opened the week in the Globex at 22.82, and we're right in the middle of the range from the prior week. Going to the daily, you can see that we do have this gap down on the daily. We're coming down and testing the 9 EMA from above. but we are above it. So we're seeing some weakness come in, but we still have a lot of day left. So we have to see if we come up and close this this gap. Our close for Friday was 22.8875. So we got basically about a 5-point gap, above us. Going to the intraday, the 4-hour, you can see we gapped down. We're below the 9 and the 20, so we do have a challenge to the upward trend. We do have a naked cross up here on the 4-hour at 22.8875, basically near the close on Friday. Going to the 1-hour, you can see that we do have a downward trend. We're failing to get back above the 9. We've got slope and separation to the downside on the 1-hour. On the 30-minute, we gapped down, and then we basically went sideways most of the night, but we're failing to get and hold above the 9 EMA, so that we're getting a continuation to the downtrend on the 30-minute. On the 15-minute, you can see that we are starting to get slope and separation to the downside, although we did get a FUBAR Mr. Sneaky on the 5-minute, but they put in an LVN, and then we rejected the move back to the LVN. But we are now above the 9, below the 20. We're rate coming into an MA squeeze, which is generally a decision point. Here's the FUBAR, Mr. Sneaky technical gap. We closed that technical gap and come up and rejected the LVN. You can see in the Globex, we just got above the LVN. We had come up and rejected it. Now we're above it. So let's take a look at the macro right now. You can see that we have the possibility of putting in an island top. There's still 35 minutes before the open, but as it stands right now, we're going to gap down and leave an open. This is not necessarily immediately a bearish sentiment. We really have to look down here to the 74, 75 before we really have to start thinking about the probability of coming down to the 64.50 and leaving an interim top in. We still have a gap to fill, and it's normal for the market to come back and fill that gap before we get continuation to the upsides. But it's something that we have to pay attention to, because island tops are, early signs of a larger retracement, a larger move back down. So just keep an eye on something to keep levels to watch. Watch the 84.50, which is the 3-day range low. And then if we get above that, I'd be looking back to going up and taking out the close at 22.8875, filling the gap. So we have a gap above, we have a gap below, and we're sitting right in the middle of it. The gap fill up here is up to 88.75, which is 1 tick below the 3-day microcomposite VPOC in this double distribution. There's a double distribution in here. You can see that we have two HVNs. We have one here at 92.75, one here at 89, and 91 is what separates the two. So once we get back up into that 3-day balance, we have to pay attention to that double distribution and the LVN between it at 91.25. So let's take our Globex and get this out of the way. And our overnight high is up at 85.75. Our overnight low so far is at 79.25. Our VPOC is not likely to change. It's at 83. Excuse me. We have a little bit of an LVN at 81 that we're fighting right now. And that's about all the information that we need for the Globex. Our daily ATR, full session 20 period daily ATR is 1540. So off of the bottom so far of the low overnight of 79 and a quarter. Our upside daily ATR target is 94.75. Let's go get rid of some old lines up here. There's our daily ATR. I'm going to say it was 94.75. And off of the high overnight, our daily downside ATR target is down at 70.35, 70 and a quarter. Okay, and it's coming to the end of the month, so I have to pay attention to critical mass. Our daily ATR is running at 1540. We have 2 days of trading left, so that gives us 3080 as a possible 2-day rate, average true range off of our overnight, our month open at 2240.75. So our critical mass is 7150. And I really apologize. My cough is just, my throat is just killing me. So I'm hacking and all right, so as long as we stay above the 7150, we could see some capitulation come in. Now, we have a unusual circumstance that we're going to have our month end 1 day before the FOMC. So we do have to pay attention to that. It's going to be kind of a wonky, month end. So that's all the information I need. We're going to be opening up, if we still open up here, we're going to be opening up right in the middle of 2 gaps. So be careful on this open. We've got a lot of targets below us, a lot of targets above us. Right now, I have to assume that, the upward trend is going to continue, that this is just a backfill. So I'm basically looking for a open auction out of range, a move down into the range from Thursday, and possibly filling the gap, but somewhere between 77 and a quarter and 74. I'm looking for responsive buyers to step in and start rotating us back up and working our way back up towards Friday's gap close up here at 87, chopping around here, but I'm expecting to close somewhere up here in around the 89 area for my Hypo 1. Hypo 2, which I give equal weight to because of the circumstances, is completely the opposite. An open auction, out of range, a move up, take out the overnight high, test the range low or fail to get into the range and rotate, find responsive sellers and rotate and come down here and close somewhere down here in Thursday's, I'm sorry, not Thursday's range. What day was this? This was the 24th, and the 24th was, 24th was Tuesday, not Thursday. So basically that's my Hypo 1 and Hypo 2. My Hypo 3 is open auction open auction out of range and then chop in between, testing both sides, okay, of the 2 ranges from Tuesday and Friday, and filling in this this low volume area in between the 2 gaps and getting a sideways, rotational day sideways, testing both sides. So that's my Hypo 3. My Hypo 4 is an open auction in range, failed to take out the overnight low, get a open drive or an open test drive up into Friday, chop around in the 89 area, and then push through up into the 93, 94 area, and come up into the upper part of the double distribution of the 3-day range. And there is going to be a hypo 5 because of the circumstances, an open auction out of range, a move down into Tuesdays, get below the monthly critical mass, and push down towards this 64.50 and come back into the longer time frame range or value that we were chopping around in for so long before we had the breakout day. So our 50% of the significant breakout candle, we should pay attention to that as well. So the high was 80.50, the low was 62. So the move back to the significant breakout candle takes us down to 71.25. Well, how about that? 71.25 just happens to be, okay, in between our daily ATR and one tick below our critical mass. So that's an interesting scenario. So this is the half back of the significant breakout candle. Move my keyboard back to an English keyboard. 50% of the significant breakout candle. All right, so those are my hypos, and we still have some time left, 25 minutes, so we could go down and make another overnight low, but right now we're fighting this Globex LVN. Anyway, that's going to complete our pre-market session for the day. As always, trade well, trade safe, and we'll catch you on the flip side.